Super.
Hey,
Well,
Bob. Bob, did you catch that about the Lakers with your jersey?
I did. That Denver was going to have a tough time, and I think you said the Lakers going to have a tough time. I kind of would rather see if Denver will have a tough time.
No, I was correct. I think the Lakers are going to have a tough time. Denver's coming back 3-1 deficits, and they're playing with chemistry and fun. That's dangerous.
Well, we'll see.
so
I won't be wearing the Denver shirt next week, I'll tell you that.
every time I'm on a call with Bob Blake, and that's every day, there's a different sports shirt. So he definitely plays to his theme.
Hold on.
I haven't
Call of
seen.
Duty esports shirt.
Okay, I haven't seen Michigan.
It's usually either Michigan, Stanford, or the Lakers. Mostly.
Jay, you heard the news. We're having a Michigan high school.
I'm just happy not to wear a suit these days, Mark. That's the only thing that I like about my COVID aminium here, which is my.
I'm wearing pants today, so.
Look great.
I haven't worn long-legged anything, and it's getting cold. It was like 45 degrees outside this morning.
91 here.
Yeah. Hi, Ivan. How are you?
Good.
All right, we're back together. I'll share a screen for a second. Obviously, things don't never work perfectly to script, and that's what makes life a rich pageant. But if we want to talk about ag, fintech, and maybe talk separately from esports, and then together, impact has those different angles, real estate crowd with future of work, and then the asset allocation. So maybe did I hear Dave Kroom? Are you gonna give us a? I popped into there and I saw him. I saw a lot of leaf around him. You want
to? Sure.
You want to share the tour with everybody?
Oh, do you want me to go out in the room? I can.
I don't know.
I'll go for a little. I'll go for a walk for 30 seconds. Yeah, so there was a lot of conversation. So I'm just going out into my main grow room. If folks hadn't been here before, I'm in my, it's an indoor tier 2 producer processor in Tacoma, Washington. So this is just where we have a lot of product. And we also do packaging and extraction. So that's just, that's my operation ongoing. So if you haven't seen one before, it smells really good in here too. So just FYI. But
takeaways
for a quick,
that's one.
Yeah. So for a quick recap, I think from an investor side and just sticking to cannabis, that if you look out in the marketplace, there's a lot of value now. So I think either the bad players or the weak ones have been dying off, and the ones that are out there that have really good assets, whether it's at a license base or production or retail level from enough scale, that things are looking really positive, and you just have to seek those out. There's some discussion about delivery service and finding your tier, right? So if you can be a producer, a packager, a delivery service, and this is either delivery service between businesses or a delivery service direct to consumer. And so this is kind of the evolution of call it a Postmates caviar solution that's specific to cannabis, might be ease. But those are all going to have independent state regulations. But as those come together, there's definitely opportunity. And then some of the other things in terms of looking at where the investments might be coming into the enterprise. In cannabis, the money is still really expensive. So there's some challenges. But I think the opportunity still exists that the money's going to normalize a little bit. But it's still kind of close to the vest in a friends and family kind of environment, as far as, in my view, in terms of what actually works. And then the other thing in some of the ag discussion was about automation and robotics and finding investment in that space, and that the ag tech VC space is still pretty active. And so there's a lot of opportunity to kind of associate how to create better farming, more efficient farming, environmentally friendly farming that also can have impact, and leveraging that as an angle to attract investors.
So in terms of opportunities, there was a comment yesterday from Craig, who does lower middle market private equity, that basically with PPP not happening and no bailout money, people are having to turn to either more equity, more capital partners, and trying to do deals. Do you think that's going to play out in the? He's not on mute.
Was that somebody else? If I look at it by state, I'd say no. I think those that are actively operating are just going to look to stabilize. I think the opportunities to consolidate and expand are very limited. I think if that's where it's if you can monetize the licenses, if you're a multi-state license holder, you're going to have to build that cash flow within and be really strategic about how you reinvest that money. Attracting new money is just going to come. It's going to be very, very expensive, and the upside just isn't there on the states that are coming on that are new. They're just not quite big enough to really have an impact on your bottom line.
And did your group talk about what events they want to do coming up?
We didn't get to that.
Well, just one thing that a month from now, or October 14th, we'll do this again. Maybe you think of whether you want to have them separate, together, all the rest. So who's next? FinTech meets sport.
I can do the esports part, and then I'd love for Nisa or Dominic, whoever would want you to talk on FinTech, because I don't want to talk up a storm like I tend to. So I'll give you a basic rundown of what I did. I brought 2 guests today, one of which just had to jump because they have a very busy schedule. That was Thomas Warcel. He was the head of business development for 11's Esports, which is Gareth Bale's esports company. If you don't know who Gareth Bale is, one of the most famous soccer players in the world. Got 90 million social media followers, big guy. Very good at golf too, apparently. And they're also doing a lot of expansion in Brazil. So Thomas is also running pretty much all operations in South America because he speaks Portuguese. The other guest I do have here today, who did give a little talk, and I want them to do more in the next breakouts in the coming months, is Lance Mudd, who is here today. He is the sports director for the United States Esports Federation, and he is also the representative for this event for the International Esports Federation.
But what's the takeaway?
Yeah, make it quick. So the takeaway is there's a lot more work to do in esports between broadcasting, tournament organizers, and teams. And what we're seeing in the next phase of esports is government recognition, and that is extremely important because government recognition and esports Olympic involvement will propel esports into the typical cycle of news and broadcasting. And so the takeaway for the esports portion is, if people here on this event want a deeper dive, I will bring a lot more executives in the esports and gaming space that won't just talk about the industry, but maybe the numbers, where the money's being made, where the money's being lost. If there's a desire for that, just talk to you or me, and we'll plan it out.
Okay, sounds good. And then Dominic or Zoe on the other sides, or?
Sure. And so on the FinTech side, we focus the conversation on crypto. The question we frequently get on crypto is why. I think the answer is clearly people have been able to get venture capital-like returns through liquid funds. It's very difficult to find that combination really in anything else. Beyond that, we have clearly published research that demonstrates that crypto has a positive impact on the Sharpe ratio for your portfolio. It does so because the returns have been outsized, like 10,000x kind of returns, and the correlations to traditional markets have been low. There is a myth that the correlations are zero. That is not true, but the correlations have been low. We do expect correlations to the markets to rise overall as liquidity in crypto grows, but we're not nearly there yet.
And then as far as new, and by the way, those who didn't hear it, but we were on the phone or on a call earlier this morning, and we had endowment CIOs saying they're going to be allocating. So they're looking at managers, and they had a strong point of view on why they're doing it. I put out that we would do this baseline September 24th event, and then maybe next major conference we could do a crypto, but I also thought with Zach Posner, legal tech meets FinTech, we could do something. It doesn't have to be on the 22nd, Zach. And then, blockchain could be in any order, but I think it would be good to get a baseline 101 and then go deep on different subjects, if that makes sense. You all tell me.
I think baseline to deep does make sense. I think it's just we're still figuring out what baseline is, and part of that is just figuring out where everybody thinks the group is. And I know Zoe has some content that she wants to share with you to see if we can sort of establish what we think baseline is to just lay that foundation.
Great, because I like the idea of the deep dives lets people in, instead of having to split among 5-6 groups, to really like focus and learn. All right, then.
I think another takeaway from that discussion was in media that movies and media are opening up, production is opening up, particularly in Asia and Europe. The box office is opening up in Asia and Europe. We're still seeing a lag in the United States. And in addition, Ivan Cohn had a chance to talk about his work with Kevin Costner and the entire new studio that they're building there, which I thought was pretty fantastic.
We were on a call yesterday with an interesting impact-oriented, the family office of the founder of Paylocity, like $2 billion, and he's building a studio that's going to be basically dedicated for diversity, you know, brown and black, both behind the camera and front of the camera. So more to come. Let's go on to impact.
I'll kind of kick it off. I don't know if everybody else wants to talk, but it's hard. Impact, it's tough to have like one kind of thing that's a takeaway. There's so many different areas that it touches, from health and wellness to environmental stuff. And yeah, I mean, kind of some of the key things that we had kind of talked about. We had the CEO from Clean Fiber on, who kind of, you know, was kind of giving us some background on what they're doing, which I thought was really interesting. And it was actually really helpful because somebody in the group, Abe, was kind of looking at some clean, green alternatives to some building materials. And so we were kind of talking about that. And one of the things that Jonathan was kind of highlighting was he's so excited because it's actually very competitive from a pricing standpoint, and it's a better product and cleaner. And so they should, you know, do really well. In addition to that, we had James Jampel on from Height Hedge, which is a hedge fund strategy that's actually going out and shorting the dirtiest energy producers in the world. And his kind of key takeaway, and you know what he's most scared of, was if you own energy companies in your portfolio, sell them. That was kind of his kind of key takeaway and guidance. And then one other thing that
Randek, you're looking at the screen.
Yeah. I'm sure a lot of people own this stuff in their portfolios. And then one thing I wanted to kind of kick over to MJ, he kind of talked about what he's doing in the mental health and wellness space, but they're working on a kind of, I guess you'd call it a challenge, a lucid challenge right now. I just kind of wanted him to explain what it is and kind of take a minute to just challenge anybody on the call to do the same.
Perfect. Thanks, Joe. Maybe I share my screen. This is just a very, very high level one pager. So hang on a second.
Should be able to. Yep.
You guys see a screen that says join the Get Lucid Challenge?
Yep.
So, you know, I think as people know, I own a co-founder and CEO of Lucid App, which is an app for all those who choose or have an interest in living a sober life. And we're doing a challenge called the Get Lucid Challenge that's kicking off next week. And it's really to fight 3 major stigmas of addiction that prevents people from getting the help they need. The first one being that, what's the matter with me? Like, why can't, a lack of willpower, right? When in fact, addiction, is recognized as a disease, a treatable disease, by the American Medical Association, the American Psychiatric Association, and, the greater medical community. Another thing is addiction is something to be ashamed of. That this is something that happens with both people who are addicted, that they're ashamed of who they've become. And then also there was a lot of studies where they would ask people, would you support giving help for people in mental health? And they all said yes. And they said, what about people in addiction? And they said, absolutely not realizing that addiction falls within mental health. So shaming creates barriers to access help and treatment. And then the third, which I was talking about on the impact panel, is sobriety. I thought sobriety would be the end of fun. And it's one of the reasons why I created Lucid, to show people all the amazing benefits that can be had when choosing to live a sober life. So if we don't show people how cool it is to be sober, nobody's going to get sober. So the challenge is very simple. You put up 3 fingers to stand in solidarity with the what we think are the 3 main stigmas of addiction. And then you tag or nominate at least 3 or more of your friends. I am going to be challenging all of you. And then to give back. And the Lucid App Foundation, we are going to be working with various companies that are on the front lines of fighting addiction. So we're kicking that off next week. We very, very much hope that we'll create a viral loop, and then people will start talking about their experience with shame or guilt or willpower or whatever it may be. So that just gives you a bit of an understanding of what we're doing. And I'll jump down the screen.
I'd like to add to the impact groups summary. One thing I noticed that there is like a lot of interest areas within the group, so that was good. The first half was like people describing their different projects. I want to do a shout out to a survey Mark and I will be sending about philanthropy. So like the social cause areas you care about based on the United Nations SDG and philanthropies you either supported or created. Also tomorrow we're gonna have like a impact insight series where we're gonna share an insight on how to save costs and carbon footprint from your tech stack. And finally, I noticed in the fintech group when I attended some of that session, there was crypto currency use for tracking the authenticity of products in the supply chain. I thought that could be used also in certain impact investments or even philanthropic activities to track the money, where it goes and how it's used. So I'd love to hear from FinTech on that area and future events by FinTech Group.
Yeah, just so you can see, this is the back end. We're putting it out, just asking for people. We want to help collaborate on the philanthropic side. So just if I'll send this link over. Just so what are you supporting? What are the ones that you established, and then which areas are of interest? So excellent. So that's impact. Then on to future of real estate.
Hey, Mark. Yeah, I'll give you a quick update on today's breakout, and perhaps Steve can jump in from the real estate perspective. But today breakout was centered on the interplay between the future of work and the future of real estate as a prelude to the deep dive that we're putting together. We centered mostly around the evolving trends for urban office space in relation to the immediate impact from COVID. And some of the things we talked about were general in nature, but we did bring up specific points around the idea that people as a whole have a certain level of awareness around their health safety, which expectations they're going to have going back into the office, which is supporting the idea of keeping office space real estate footprint as it is, but much more less use. So we don't think that we're going to have 100% capacity. We don't think we're ever going to go back to that pre-normal situation. We think we're going to have probably 50% usage of people in the office, and the other 50% of the time they're going to be in distributed places or micro offices outside of urban centers, and therefore does the real estate portfolio shift and change in that way. We also discussed like the human desire for people to work flexibly to find a certain amount of higher level of productivity to solve for disengagement in work, but can companies and management and leadership evolve to a level of trust, true real trust, to accommodate such a situation and involvement of the relationship? And then does that impact and solidify the distributed work nature of work, and then also the spreading of office real estate beyond the urban center? Steve, you want to jump in? That was our perspective of future of work, but Steve, what did you hear from your side on future of real estate?
Yeah, so as Denise mentioned, this was a prelude to a future of work / future real estate deep dive that we'll be doing in the near future. And coming at it from the real estate perspective, I think one of the interesting things in the future of work discussion was the fact that obviously the future of work is going to be different depending upon industry, depending upon company and geography. And so from a real estate perspective, it's important to be able to identify those variations and what the impact might be in different industries and different markets. I think one of the key takeaways was that the future of real estate, the spectrum of uncertainty is much broader than it ever has been in the past. And so it makes it more challenging from in terms of real estate investing, because there's so many different possible outcomes here. And what happens in the future of work and remote work or flexible work has an impact across all the different asset classes. And COVID has impacted real estate in very different ways depending upon what property type you're talking about. Retail and hotels have been hurt the most, but have very different prognosis going forward. Retail is clearly the worst off in the future. Hotels should rebound, but business travel being affected by the future of work is certainly a factor that has to be considered. Office properties have the broadest range of possible outcomes depending upon what the future flexible workplace looks like. And residential is I guess, the safest, but the question is what are the best plays in residential? And I think, again, going back to the future of work, it's an accelerant and will accelerate pre-existing trends in terms of people migrating from the largest urban markets to secondary and tertiary markets, smaller cities. Now that they have more flexibility in the workplace, they have the opportunity to work, to live in different places now, places that have lower cost of living, higher quality of life. And so that was a pre-existing trend, but with COVID and the future of work changing, it will accelerate those trends. I think the biggest question mark for residential, and in general for real estate also, is that you see people leaving the cities currently because of the shutdown and the virus. But that's a reversal of very long-standing trends where people have been migrating to the cities. And so will that reversal trend continue, or will it go back to people wanting to be in these vibrant mixed-use live, work, play environments? I think that's one of the key question marks. But certainly future work and the virus is accelerating a lot of the trends that we've already seen in real estate.
So if it's any judge, I've seen 10 people move from New York to like buy houses. So that's hard to reverse. But I have seen younger people find New York more affordable now. The occupancies are up. The vacancies are up, so the prices have fallen for rentals. But yeah, I think it's all over the map to be played out. That'll be a great deep dive. I just would emphasize data. If you guys could give us data, that would be useful. Mm-hmm. Next up, asset allocation.
Hey, Mark. First, we wanted to throw out an attaboy to you. When talking about teamwork, we think what you're doing actually is fantastic. It's a great way to stay connected, relevant, and the group just wanted to relay that to you. But that said, we thought
I'm trying to keep you relevant, Sean.
Well, what we would really like you to do is maybe develop an app so that we can stay connected on that front. But yes. It's serious, going back to—
I'd like you to post this on that app, but go ahead.
The discussion we had around asset allocation, just touch on some of the key points. We do think the playbook has to change, and you know, we talked about sort of traditionally asset allocation work is built around a concept of reversion to mean and correlation of assets. And, you know, Andrew brought up a very poignant point that it doesn't take into account any evolution of the capital markets. And, you know, we're in an environment where, you know, things have changed dramatically. A long-term discount rate is 0. And as we're heading towards more of an MMT type of environment, the rules are breaking down. So the bottom line is you got to think about things a little bit differently. We touched on the whole sort of idea of, you know, the Morningstar style box approach, the whole growth value. We think is just the wrong way to kind of look at things. That, you know, going back to you know, what was more prevalent back in the 70s, where you're really just investing in good businesses and companies. That's what's driving the investment decision, and not some of these other things. And that's the way it should be looked at. We talked about active passive. And again, as we have this transition, that's going to change the conversation around active passive because you're going to want to be more focused. was there, I don't know if I heard a question coming, but, you know, those were the things. And bottom line, you know, when you're thinking, one of the big things that as an allocator we're struggling with is the interest rate environment we're working in and generating cash flow for the needs off of the portfolio. And you're going to have to just get more creative. It's clear that central banks are forcing risk taking. So you're going to have to find that comfort level of risk to take to generate whatever level of cash flow or income you're going to need off of the portfolio. And bottom line, there's a bunch of ways to do it. You're just going to have to get creative and match what's best for the purpose that you're doing it with. And then maybe to wrap up, talking about you know, some of the things that scare us. The election, not per se, it's sort of the outcome of what does that mean to regulatory and policy changes, and then how that flows through to the companies in your portfolio. You know, the one thing we did talk about, if there is a Biden win, it's probably going to mean a change in taxes, and you could see you know, some tax selling coming into year end, which in turn provides an opportunity too. So you're going to see some companies that are attractive that sell down. It's going to provide that opportunity because of that. So on one hand, there's a concern. On the other hand, it potentially creates an opportunity too. And if anybody else in the group wants to jump in, I'm sure I missed some stuff.
You actually got it all. Thanks, Sean. That was an impressive list.
So I mean, there's lots of, we'll make these slides available to you. In fact, this, you know, this whole thing is recorded and transcribed as long as you're on the app, because that's where it will be. I just thought this was also interesting. I would love to get the data behind how the U.S. manufacturing has now, you know, we fell behind, China fell behind, and we fell behind, and now we've surpassed China. I just don't know what those numbers are. I'm very curious to see how that breaks down.
Actually, Mark, that's just the relative index for that country. So it just shows that China went into it early and came out of it earlier. The U.S. went into it later and is coming out of it a little bit later, but we rebounded back. 50 is the number for expansion territory for PMIs, and they've moved back above 50, which is really the key point in a very short period of time. And as I mentioned earlier, the real issue in the economy is more in the service sector rather than in the manufacturing sector right now, because the service sector had created so many jobs over the last 30 years that coming back slower is going to be the problem for that. That's where that came from.
Interesting. Well, I'm actually, we're going to wrap up here. Erica Orange, their group is having a deep dive 4-hour session on what she'll do in an hour tomorrow. So we're starting early to please those in Asia and some Middle East Europe, and not the West Coast clearly. But we'll have she'll be going into these number of forces, and some others will be chiming in as to how those forces here a little bit larger. You know, this is not exactly secular, you know, there's secular trends, but, you know, we're seeing, they call it, everything is accelerating, and she calls it to implosion. Things are happening rapidly fast, whether it's a vaccine or otherwise, AI robotics. There's a real, lots of conflicts and different opinions between generations right now. So that whole transition, succession, and whether it's family office or otherwise, trust, you know, or you have proxies, everything. VR, I guess you sort of hit on the gaming side. Health wellness is, you know, someone was commenting we should have a health wellness, ag should do an impact event together. That's really, hopefully we'll be doing that. And she's going to deep dive into this. Do we really need, you know, 4-year colleges? You know, that's to be relevant and competitive. So that'll be the discussion tomorrow, and then we'll have all kinds of breakdowns that you can see towards the end of this deck, which I can share, whether it's sorry, back down here in the schools. You know, we just added Berkeley, Boston College, you know, Denison, of course, added Hofstra, Queen Mary, Temple, UMass is new, Michigan, of course. Boom. So that's tomorrow. The vision here is partly because I've done this because of Denison and Michigan. It's sort of what inspired me to do this for family offices. So that aspect will be emphasized tomorrow. But any questions, comments? You know, what I think is this is sort of the stirring of soup, and it's you know, you don't get enough time to really go deep, but the idea is that you can go deep through these deep dives. We've done them in 7 or 8 categories, and look forward to doing more of those. And I'll make one more plug for the app. Go to the app. That's where we can do this between events.
Michigan's one of those schools that can go home or close up.
Well, I think I did see a statistic. We would have the athletic budget of Michigan is $200 million. Can you give me the date on Ohio State?
Really? You want to go there?
I'm just throwing you a softball. That's right. No politics and no Ohio State, Michigan. How about that?
They couldn't stand it with the SEC.
The
holdout was
so says the guy in Florida.
All the kids at Florida State and the University of Florida, they're all catching COVID. It's like the badge of honor.
Well, I think it's been no Michigan player has had it for I can't remember what period of time. I do know that.
Had a win for what period of time?
The LSU coach says most of his team has it right now.
I should have said a 7-year college. Sorry.
Well, the New York Times has a map where you can go on and look at universities and see what the.
Oh, good. Send me that link. I'd love to see that.
Okay, absolutely.
You know where you can put it? I think you can guess.
Yeah, the southern schools are developing a new strain. It incubates in a half hour. They're going to breathe on the guy in the first half and win in the second half. Like,
oh God, we have devolved.
Sorry.
No, it's okay. Bring back the single wing. Anyone else with a comment or insights before we part?
Thanks, Mark. If you need another show and tell, you're welcome to come out to Tacoma anytime. I'll give you a tour.
Got to get your school on it. It's really, by the way, the
Cougs? Yeah.
We've got, this is really outdated. Where is it? This was like a month ago, but you know, obviously Denison, we've got almost 4,000. I know it literally is almost 4,000. Michigan is getting going again. And in all these schools, you can invite your friends. And then if you're in groups, so I'll plug this if you wanted, we have a playbook of how to support you to get your events going. And of course we can, and we do these.
Now, the invite in the groups, is that an invite through the app or is it just a link to something? Maybe I need more practice in using the app to invite people to specific groups.
Yeah, no, it's you just go from your group. We don't have a Washington, but if I were to write Denison, you can invite, right?
Wow.
And
okay.
But it's also, all this stuff lives, we have parallel universes. We just launched Babson and Boston College, and
Mark, you need St. Lawrence there.
I just need someone to lead it.
Yeah. Let's get on the phone and talk.
Plus, Michael Eisner's kids went there, so he's a big supporter of both Denison and. So these are where we're going to always have in parallel on the website like if this is after this week, you know, this is finance and fintech, you know, that this we'll change it to October 14th, 15th, and same thing over here on alumni. And we're also adding companies. So we don't have St. Lawrence in there, but if you were to.
Yeah, we'll help you out.
Okay. And a lot of people like Tiger 21, Milken, World Economic Forum. There's some crossovers of some people, and even some people, you know, how many CFAs do I know? Like Joe and all the people that I know in investment. So people by shared interest, shared experience, just allowing people to come together that way. And then, you know, and then if you are on a group, what really helps them take off, you can see who's in a group pretty easily. Just go to your group, see it. I can do a search. We can do advanced search inside our app. Well, you have all these groups, but you can also, you know, and it's really easy to within LinkedIn. You can invite them. You know, so St. Lawrence. I mean, I can look at it right now. How many people I'm connected to? St. Lawrence. Just 16. So I don't know if you know any of these people. That's the family office in Dayton area. There's you.
Yeah, I know a bunch of those people.
VC. So Altai used to work for me. A long time
Hey,
ago.
Mark, what was the name of that sobriety app again?
Lucid, Loosid.
Loosid, Lucid. Okay,
Yep.
thanks. My wife is interested in that.
Well, MJ's on, so you can do the Lucid challenge.
Yes, I will be challenging everybody.
So again, go go recharge. It's going to be really just 2 hours tomorrow. It'll be all about the future trends macro, followed by shorter breakouts, and then the town hall debrief. So it's basically 8 to 10 tomorrow. And hope you can come.
All right. Well, thanks, Mark.
Thanks, Mark.
Mark, thanks so much.
Thank you, Mark.
Joe, we could get St. Lawrence up right now. And
Okay. I mean, what do you want to do?
Literally, it's pretty easy. Angad, are you on? One of our team. We'll call you. We just get we put it together on the app on LinkedIn. Make you a manager, and you just invite your peeps, and if they're interested in all the things you're interested in, impact otherwise, then you'll get more the merrier. You can get the St. Lawrence group.
A lot of them. Yeah, it would be good.
Oh, and by the way, you know a lot of people. Tom, are you still on? I don't know if Tom's on. But you're like Patagonia. We think Patagonia is perfect for Kevin Costner's.
Yeah, he already knows Yvonne. They go fishing for bonefish.
Well, Kevin can join him. Hey, Mark, I can also bring Hobart and William Smith in. There's a pretty wide, diverse group of, you know, people from their tech, investment, you know, all kinds of stuff, entertainment. So can you send me a link that I could send to the alumni association, and they can kind of push it out?
Alumni doesn't really focus on alumni. They focus on them for making money, for raising money.
School, right?
This is by alumni for alumni. You'll get a sanitized way to do. They have their own agenda, and it's a long story.
Got it. Okay.
But these are people I know from Hobart. I remember like doing a road trip to Hobart for lacrosse game back in the day.
Yeah, well, we were Division III champions for 10 years running until they made us Division I because we used to beat Syracuse all the time. And then our coach left, and I think he went to wherever this number one is now. But that was our major sport for many. When I was there, it was like we were the top team.
Does St. Lawrence still have a soccer team?
Yeah.
Are you talking about the Hobart soccer team?
No, we were talking about the lacrosse team.
Okay.
Why, you're going to make fun of us?
I was.
2013, they won the national championship, Mark.
St. Lawrence?
Yeah.
Oh, wow. Good for you.